Oof, here we go, guys. One Florida insurer just got the approval to raise their rates by 31% on their customers. Absolute insanity. We had just started to see the stabilization of the insurance market here. Depending on who you ask, from what I see on quotes, things are kind of normalizing. But man, then they come out with this. We'll go over this article. And when I say normalizing, they're not going down, guys. They're never going back to what they were, in my opinion. They don't seem to be increasing to the degree that they were. I can price within $1,000 usually a homeowner's quote, just from what I've seen. Again, I'm not an insurance agent. You have to get an official quote from an insurance agent, but my ballparks have been pretty decent lately, where before someone would go to buy a house, they'd be like, hey, it's going to be about $1,200. They're like, I got $5,000 quotes. Whoa. That's when everything was going through the roof. Everything was getting crazy. And some of that is still around, but right before hurricane season, well, we're in it actually, but right before the peak, I'll show you guys when that is as well. 31% increase on people. Man. Now, this is coming out of the Palm Beach Post. I'll link the article in the description. It is contained to one provider right now. This is Florida's trusted resource underwriters exchange, or True. Oh, it's true. They received an approval for a 31.5% rate hike on their property insurance. That increase averages out to $1,500 nearly for each customer. It's going to affect 20,000 people in the greater Tampa Bay area. And knowing what we know about the economy and the savings rate, I mean, even, $1,500 is hard for people to absorb out of nowhere, even though it's going to probably be spread out over the year unless you pay in full. Most people escrow these charges. It's a big hit. So I suspect there's going to be a lot of people shopping around from that company, is my thought process. Now, they did cite multiple hurricane impacts and, reinsurance expenses as justification for this, but they were also recently downgraded and they had a change in ownership. So might be a one-off thing, sort of a internal conflict situation, if you will, and not indicative of the greater insurance situation in Florida. Now, they try to downplay this very quickly because you can see this headline is going to be cause for concern, and a lot of media is going to run it. Maybe even some YouTubers might talk about it, but they may not go into the intricacies of what I stated here previously, that it's just one company. So it doesn't really matter because people are going to see this. They're going to see 31% increase in insurance in Florida, and they're not going to read the article. So they're not going to look through the data, and that's just going to cause a lot of concern. So they're trying to talk it down. Hey, it's not a cause for concern. Things have stabilized. Like I mentioned at the beginning of the video, hopefully that's the case. It's not indicative. So they also add, according to the 2025 data from Consumer Financial Services, this is coming from Bankrate, the average cost of homeowners insurance in Florida is around $5,600. They do not specify if that is just homeowners insurance or is that combining with flood, but since they go on to say some coastal communities can reach prices as high as $11,000 a year, I got to assume maybe flood's in there. $5,695, I got to tell you, you would be hard pressed to pay that for a house throughout Sarasota, Charlotte, or Lee County that was not basically on the water like this. So I think $5,695 is a little high. I'm even seeing stuff that's older, not really protected, not updated, in the high fours, big homes too, as long as they're not near the water. So again, always consult an insurance specialist. I'm just theorizing here, but that's what I've been seeing on the ground, at least anecdotally. So I think their assumption here, that's a little high for me. And really quickly, friends, if you enjoy this content in any way, I would really appreciate it if you could smash that like button. Maybe consider subscribing to the channel. It helps me out immensely, and I appreciate everybody who already has. Since we're talking insurance and we're walking by the water, Matt Devitt of Wink News just posted that we have had the least active start to hurricane season here in the past 16 years, which is good. But he was quick to say that that doesn't mean we're out of the woods. Let's take a look. All right, guys, and this is the post from Matt Devitt from Wink Weather. Least active start to hurricane season since 2009. Matt Devitt, awesome dude. Don't know him personally, just watch him every time there's a storm. He does great reporting. He says, great news, but remember the peak of the season is still ahead with 92% of the tropical activity remaining. So we're hoping for the best, but plan just in case. You can see we are right here. So we're just about to come into it, and hopefully nothing crazy. So as you can see, guys, we're not even at the kickoff stage of the game right now. We got a ways to go. We're just getting started up for our active season. And Helene came late September. Milton came early October. Ian was late September. So we'll see. We'll see. Hopefully everything is not a problem. And while we're talking about insurance, we can't avoid that conversation without also talking about property taxes, because some of these places, I mean, property taxes on these could easily be 15 grand. And that's, so as the insurance situation has stabilized, kind of unfortunately, the property tax situation has gone haywire, because now we're getting consistent reassessments from these giant valuation jumps, especially for vacant or second homes or investment homes, because they don't get our homestead protection down here. And it's not just Florida. They're starting to see this all over the country, where investors are going, this don't even make sense for me to carry anymore. Like, never mind the maintenance and repairs. The property taxes and insurance are starting to kill these landlords. And I got to tell you guys, I feel a little weak pulling up Facebook posts, but Newsweek is reporting on Reddit threads. So, I mean, I get anything goes anymore. But this isn't just Florida. This guy's in Texas asking anyone else in Texas seeing property tax far. Did somebody just message me? Did somebody just message me a foot? Hand, foot, and mouth disease. Oh my God, my kid she does not have hand, foot, and mouth disease. Anyway, so this is a landlord in Texas asking, does anyone else in Texas seeing property taxes far outpace what we can expect rental rates to keep up with? Collectively, our 8 doors saw an increase in rent for 2025 over 2024 with rates of $575 each. Taxes, however, increased by $3,500 from last year to this year. So basically, they can't keep up with the taxes. $3,500 increase in taxes. Now, they don't specify if this is one property or all 8. If it's all 8, it's not that bad, but this we have seen on some singular properties. And in the comments section, there's people from Chicago, all over the country talking about stuff like this. And that's before we even talk about insurance premiums skyrocketing. Seems like we are not just gaining, we are falling behind as landlords. So look at that, guys, $3,500 a year increase on just your property taxes in Texas. How do you make those numbers work? Because we have a weak rental market around most of the country. No matter what people tell you, they'll try to tell you it's very strong, it's coming back, but it's not where it was. It's very elevated over pre-pandemic levels, but it's not what it was like in 22, 23, very similar to the housing market. Now, I do see that stabilizing here a little bit, but it's not really so much that people are obtaining the rents they want. It's that people are refusing to pay them and they're just leaving them up, not getting rented. But when you see, and it's going to happen here, it's happening here right now. This is why investors have fled most of this area and the state. And I don't feel like they're going to be back anytime soon, in my opinion, because you're going to see your taxes go up $3,000, $4,000 a year, and you can't pass that on to the tenants. Now, most people who came here and invested jumped into the mania. They overpaid for their investment properties. We've been up and down this road. We know the Airbnb disaster that has happened. And they were getting by on slim margins, the skin of their teeth, as it was through this rental market correction, if not outright losing money, because we've also talked about that before, where a lot of investors opted to hang on to these properties and take a loss the previous 2 years. When they saw the movement happening, that was what they committed to. It's been almost 3 years for some of these people. Nothing's changed. It's getting worse. It's getting worse. Your insurance is up. Your property tax is up. Local rents are down. What do? I know what I do. I know what you would probably do. And I think that is what is going to counteract our great delisting here come season again. I think a lot of investors are just going to say, no, I hung on. I did what I could do. Doesn't look like it's good right now. Time to let this thing go. Cut the bleeding, especially when all of those costs are going through the roof on them. So that's my theory. It's my theory every summer, actually, if you watch my videos. And it continues to happen. I think we're also going to see people who did the temporary rate buy downs start to list this year as well. I'm seeing short sales, certainly not to an alarming degree, but you know, that's another word I didn't have to mutter for years. I didn't see short sales really for the better part of 5 years. And now I do see a couple a month. It's not insane, but it's enough for me to go, oh, there's more of these. Some REOs here and there. We'll see how it progresses. But I do think the people that did the temporary rate buy downs, their rates are resetting to market right now. And they're very high. You know, people took these things in 21, 22, even 23, and the interest rates are set to adjust usually every 2, maybe 3 years, and then you're going to the prevailing rate. So that's going to be another interesting dynamic we see, because if you were someone who took advantage of this and then you had to leave and you said, I'm just going to rent it out, like these investors, well, your cost is going up even worse than if you look at it that way, because we had people that bought, had to return to work, had to move out of state, and this was the option they went with. They said, I'll just rent it out. I got a temporary rate buy down. Maybe I'll get it all sorted by the time, you know, rates drop. They haven't. So now not only do these people who are inadvertent investors, a lot of that around here, inadvertent investors, have to face increased insurance, increased property tax, and then a new mortgage rate as well. I don't think that's going to be sustainable. I just don't. So for those reasons, I think we may see another strong inventory dump here coming in the beginning of season, right around November, December, January. And if not only Southwest Florida, but a lot of the metros we looked at does not clear out some of this inventory, if they don't get some of these listings off the market and there's another dump in 26, I don't know. Had this conversation in 24, didn't think it could happen in 25. Happened worse than I thought. We got more listings than I thought we would. So it's going to depend on a lot of factors, but if we don't get some of this inventory off the market in the next 6 months, it could be a bloodbath next year. That is going to do it for me today, guys. If you like this video, give me a like, share, subscribe, and I'll see you next time.